Okay. Right. Okay. Now, guys, from the first paragraph, whatever that is needed for the question, we have now taken care of. Okay. Guys, now, can you do a small work and show it to me, guys, over here? Okay. Right. Right. Can you guys try to mark and show me the share capital and the retained earnings at the acquisition date? Okay, because now guys, remember in this question we are also calculating what goodwill. Now see, for goodwill, investment is done, fair value of NCI is done. Now only what I need is what, guys? Net assets at acquisition date. To do that, can you quickly mark and show me, guys, share capital and retained earnings? So when is the acquisition date, guys? Once again, in this paper, the acquisition date is on January 2006. Okay. Can you please try to get me those two answers? What and what answers? The answers for share capital and retained earnings. Okay. Please do that and show it, guys, for me. I want Rakewood's share capital and retained earnings at what date? At the acquisition date. I want that answer. Okay. Right, now guys, listen carefully, because there are a lot of numbers. It's very easy to get, what you can say, guys, distracted. Okay, let's start. Now guys, net assets, I want of whom? Subsidiary. So let me, guys, now go to Rakewood. Okay, right. Now guys, Rakewood's share capital, they are telling 15,000. Now guys, normally does share capital change? No, we can always mark the same thing, right? Mark it, guys, over here. Done. 15,000. But guys, this is the mistake that you should avoid making in the paper. Now guys, look at this. Rakewood's retained earnings, yeah, very good. Rakewood's retained earnings are 25,000. Correct. But 25,000 is for what date? 1st of October 2005. Are we buying the company on 1st of October 2005? No, guys, we are buying in January. So then what you should do, it's like this. You take 25,000, that's for October, no? But then I need to know on January how much. So what I should do, I should add for this one profit after tax into number of months. Okay, that's the equation what I have done in class. Little bit check your theory book and say, guys, I will done this. Okay, profit after tax into number of months. Okay, guys, now profit after tax, I should take whose one? Parent or subsidiary? Subsidiary, because we are calculating for subsidiary. So guys, subsidiary's profit after tax is 10,400. Okay, so let's mark that one then, plus 10,400. Okay, okay, so again, don't make a mistake, guys. Now listen, now I started with 25,000. No guys, 25,000 is for October. I need to go until January, because I want to know on January what's the retained earning. That means, guys, how many months I have to go front? 3 months only, right? Not 9 months, guys. You have to go 3 months down, because guys, listen, if you are starting with the opening balance, you're in October, no? You want to get to January. So October, November, December, 3 months profit you have to add. Can you guys quickly mark and show me, guys, the retained earnings at the acquisition date then? Right, so guys, please remember, they gave the retained earning on October. I had to find how much is it for January. Okay, so 25,000 plus 10,400 into 3 divided by 12. Okay, what will be the answer, guys, then? 27,600. Correct. Good. Guys, shall we do it this way? Shall we first finish off the goodwill completely? Then we can forget about that part, because doing goodwill and income statement together is confusing. Let's finish off goodwill once and for all. Okay. Now, guys, I need fair value adjustment. Okay, guys, can you please read adjustment number 1? There are 2 fair value adjustments. Could you guys mark both and show it to me properly? Okay. Right. Please read the first adjustment. There are 2 fair value adjustments. Please incorporate them both and show it to me. Guys, you should only mark the fair value adjustment. No need to do anything after that. Okay. Now, to be very honest, guys, now over here, 2 things are happening. Here also 2 things are happening. But guys, listen. When you do goodwill, you just need the fair value adjustment on acquisition date. On January, what happened? That's it. No need to do anything further than that. Okay. Yes. Correct, Amjad. We would be doing that, but on the income statement. Correct. Okay. Right. Okay. Now, guys, you all have read the question. Okay. Now, guys, can you tell me first part? Plant had a fair value of 4 million above its carrying amount, and the useful life is going to be 2 years. Okay. Now, guys, what is the fair value adjustment? Is it the 4 million or the depreciation? What we should do? We should only take the 4 million. Only the fair value adjustment. See, guys, fair value adjustment is 4 million. So when you're doing goodwill, you should only take the fair value adjustment. Then why they have given 2 years of useful life? That is to calculate what, guys? Depreciation. Depreciation normally where do we mark? Income statement. Okay, so that's why they have given both. So first thing what you do, you focus. Okay, I'm focusing on goodwill now. I should only take what is happening on acquisition date. On acquisition date, the fair value adjustment is 4 million. Start writing, guys, over here. 4 million. Done. Okay. Now, guys, can you tell me second adjustment on the acquisition date? What actually happened, guys, over there? Check and let me know. Okay. In the second adjustment on the acquisition date, what happened? How much is the change? Only 200,000. Why, guys? 800,000. Very good. Became 1 million. Okay. Start writing, guys, over here. 200,000. Done. Fair value adjustment. 2 fair value adjustments are there. Okay. Right. Now, guys, some more is happening, but that's a problem for later. Okay. Guys, second one is NCI. Already done, no? Okay. Third one is what? Now, when you read sales from Rakewood to Laurel, then one company is selling to one company. That doesn't affect goodwill. So, no need to worry about that. Okay, let's go for the next paragraph. Laurel's investment income. Guys, listen, investment income does not affect goodwill. So, that means now we are done with everything. Whatever now affecting goodwill, now we have finished. So, now let's calculate goodwill and let's forget about it completely. All good? Okay, now, guys, can you quickly calculate and show for me goodwill faster? Right, total this up, guys, now. Right, please total your working number 2, net assets of subsidiary. Okay, so guys, when you total it up, you're getting 46,800. Is that correct, guys? Okay, no, right, 46,800. Right, now, guys, can you take the 46,800, put it over here? Right, now, guys, please calculate goodwill. So, guys, my advice is this. In your exam also, if they ask you to calculate goodwill, first finish it off, guys, once and for all. Because to be very honest, trying to balance income statement with goodwill is really difficult. So, first you focus on goodwill, get that done, and forget about it. Then you can do the rest of the adjustments like a normal income statement, because one is SOFP and one is income statement, no, so little confusing. Yes, the retained earning is, guys, is the retained earning answer correct, guys? My one, 27,600. That's okay, no? Yeah, 27,600. Right, so guys, goodwill is how much, guys? 16,487 according to an answer that I got. All are guys okay with that part? 16,487 is goodwill. Okay. Right, okay. Now guys, listen carefully. Now goodwill is calculated, no? Right. Yeah, that is using the carried down, but no point of going for that one because they have already given the brought forward. No, so because they have given the brought forward, let's stick with that equation. If not, what you have to do is like this: 25,000 is retained earning brought forward. No, then you have to add 10,400. Then you will get what? Retained earning carried down, which is 35,400. Then from this, you have to again subtract 10,400 into 9 over 12. That is second method. But because they have given brought forward, go with the first equation. If you carry it down also can, but this is how you have to do it. Okay, first you have to find retained earning carried down. How to find retained earning carried down? Retained earning brought forward plus profit after tax. Then again from that you have to remove 10,400 into 9 over 12. All good? Yes, right. Okay, now guys, goodwill done. Let's forget about goodwill now going forward. Okay, guys, now can you again come back to adjustment number 1? Right, please come back to adjustment number 1. Right, now they have given 2 years. No, why did they give 2 years? To calculate what? Depreciation. Start calculating depreciation now for me, guys, for this paragraph. Okay, please start calculating depreciation. Guys, now don't make a mistake when you calculate depreciation. Though it sounds easy, think and calculate. Think and calculate. Please calculate for me depreciation. Now we are only focusing on what, guys? Income statement. Now we are only focusing on income statement. Okay. So guys, how to calculate depreciation? Very good. Take 4,000 divided by 2. But that into how many months? 9 over 12. Because guys, 9 months subsidiary, no? So don't forget. So what's the answer, guys? 1,500. Guys, that 1,500, can you please copy it and show now into the income statement? Right? Can you copy that and show into your income statement? Right. Now guys, listen, this is what depreciation plant. Where do you think, guys, plant would? Now, to be very honest, this is a little bit of an older question. New questions, normally they will tell where to go and mark. But guys, from knowledge level, can you tell me if it's a plant, normally where we have to go and mark the depreciation inside? Normally, guys, where to go and mark it inside? Cost of sales. Okay, if it's a plant and machine, guys, building and all administration expenses. Normally, guys, if it's a plant, we have to mark it to cost of sale, because guys, plants is used for manufacturing the product. No, so it's a production related cost, so therefore we have to mark it to cost of sale. But don't worry, in your new exam they will tell you exactly where to go and mark. So guys, mark it over there. 1,500. Done. All good? Right. Guys, second paragraph. Now, can you check and let me know what happened at the end of the year? This is similar to the question, I think, if I'm not wrong, run a corporation. Okay, now with you all, with both the batches, I did a past paper called runner. If not, I think, guys, party, one of the two past papers. This adjustment came where the inventory fair value is changing. With both batches I did, but I am not sure whether it's runner or party, but one of the two questions. Right, check and let me know, guys, what happened. Now again, we'll do it together. When we started the question, or when you bought the company, what happened to the fair value, guys? Fair value increase. Can you see, guys? 800 became 1 million. At the acquisition date, 200,000 went up. Correct or wrong? All of this inventory has been sold on 30th. Then, guys, at the reporting date, is anything there? No. Why? What happened, guys? At the reporting date, the entire 200, what has happened, guys? The entire 200, guys, we have sold. Now it's 0 at the reporting year. So therefore guys, can you tell me here to here then what's the change that we have? It's a minus 200. Very good. Okay, so again guys, those who didn't understand, no, listen. When I bought the company, yes, very good, Basil. That's what you have to do. Super. Right. So therefore, guys, what happened when you bought the company went up by 200. At the reporting, none of this is available. So technically, guys, it has gone down by 200. So what happened, guys? Inventory lost value by 200,000. That's what technically happened. At the end of the year, our inventory lost value by 200,000. Guys, now normally inventory will affect what? Cost of sales. So guys, you have to understand, like URP, when the inventory goes down, now inventory is losing value. No, when inventory goes down, what will happen to cost of sale, guys? Cost of sale will go up. It will increase. Right? Can you guys now mark it and show over here? Plus 200 to cost of sales. Guys, remember now. Guys, now all of you understand now. Closing stock is going down. What you should guys also understand is that when cost of sale goes down, when closing stock goes down, cost of sale goes up. Like today morning question, can you remember the inventory lost 600, with that cost of sale goes up. Same concept. Okay, now the hard part is done. Now easy one. Okay guys, can you do and show me adjustment number 3 faster? You should deal with two things: intra-group sales and purchases plus URP. Can you guys try to do both for me over there? Adjustment number 3. I'll give you 5 minutes. Please try both adjustments. Intra-group sales and purchases plus URP. Okay, right. Please do both guys for me. Guys, they are selling 1.2 million per month. Huh? So take that into consideration and do. Okay, guys, can you little bit check and see? First of all, did the sales part, did you all do properly? Okay, now guys, what's happening here? They are selling 1.2 million per month. So we should multiply by how many months? 9. Very good. Because guys, it's a 9-month subsidiary, no guys. So you have to only focus on the subsidiary time. Because guys, listen, if they had traded before the subsidiary, I mean, now Laurel bought Rakewood, no? If Laurel had traded with Rakewood before subsidiary, before it becomes subsidiary, then that's not relevant. We have to only focus on post acquisition. After buying the company, how many months? So therefore, guys, 1200 into 9, what will be the answer? 10,800. Okay, so guys, now what should we do? First, go to revenue. Intra-group sales, no guys. So what we should do from revenue, guys? We have to subtract from revenue, right? We have to remove, right? Mark it guys over there, minus 10,800 from revenue. Right, then guys, next one, cost of sale guys, but we should mark it over there. Cost of sale, we have to remove 10,800. So guys, remember, for one company this is sales, remove from sales. For other company this is purchasers, you have to remove from purchasers. All good, right? So guys, please look at income statement carefully, right? Next week also we'll practice a few more questions. Okay guys, now next part. Now guys, we have to calculate what now? URP. Okay, how to calculate URP? In class I have given you a formula like this, right? URP is equal to profit multiply by inventory held. Correct or wrong? That's the equation. Okay, profit multiplied by inventory held. Okay, now guys listen, the profit is like this. Now what's the profit these people are keeping? 20% guys, but small problem, this is a 20%, but guys, there is a 20% markup. So markup means you have to go like this, 20 over 120. Okay, that into inventory held. Laurel had 1.8 million of these goods, so over here guys it has to be 1.8 million only should become inventory held. Now if you are thinking how did the profit become 20 over 120, guys look at this. Always in accounting, profit is equal to selling price minus cost. Understood guys? Okay, now profit is 20% now guys, but these people are keeping what guys? Markup. Markup means what? Cost is only 100%. So guys, if cost is 100% means selling price should be 120. Very good. So 120 is represented by 1.8 million inventory held. That's why I am going 20 over 180. Sorry, 20 over 120. Okay, right. Can you guys calculate for me URP quickly? Right, so I'm getting 300. Right, guys, if you're not understanding anything when I'm doing the past paper, you please let me know. Okay, right. I'm getting the answer as 300. Okay, guys, now listen. In theory class, I have said you, no matter who is selling to whom, once you get your URP, what you have to do? Go and add to cost of sale. Okay, right. Can you guys go and add to cost of sale quickly? Plus 300. Why are we adding to cost of sale, guys? Listen, if parent sell to subsidiary or subsidiary sell to parent, the URP double entry is inventory should become credit. When the inventory becomes credit, inventory reduces. That will result in cost of sale going up. That's why we are adding this to cost of sale. So memorize it, okay? Doesn't matter who sell to whom. Once you get your URP, inventory becomes credit. We have to remove the profit from inventory. Therefore, cost of sale goes up. That's why we are adding to that. Okay. Right, so guys, adjustment number 1, 2, 3, everything is done. Okay, now guys, let's move on to the fourth one, guys, faster. Okay, now let's move on to the fourth part. Okay, right, can you guys now quickly read this one? So with this, the question is over. 20 marker we have done today. Okay, so we have guys finished then today 40 mark worth questions. That is a full section C of the paper. Okay, let's start. Number 4. Laurel's investment income. Laurel's investment income means here this one, guys. Can you see here 500? That one. Okay. Investment income consists of its share. Okay, so that means whatever they have to get, 500,000 paid by Rakewood. Okay, now guys, we have done this in class. Who is Rakewood in this question? Rakewood is whom, guys? Subsidiary. When subsidiary is paying dividends, okay, for subsidiary it will be dividend paid. For us, it will be dividends received. When you receive from them, we have to eliminate from our books. Why? If not, guys, there will be a double count. Now, see, guys, when they are trading between each other, see, when Rakewood is selling to Laurel, you're removing sales, no? Like that, when subsidiary is paying dividends to the parent, you have to remove that from investment income. So, guys, see, they are telling its share of dividend 500,000 paid by Rakewood. Okay, now guys, can you wait? Its share of dividend of 500,000 paid by Rakewood. Guys, listen now, don't make this mistake. Rakewood is paying 500,000 dividend to all. Understood? Are we entitled to entire 500,000? No. What does it say? Its share. Normally, guys, we own how much of Rakewood? Only 60%. Very good. Check and see, guys, 60% over there. Right. So, guys, 500,000, 60%, guys, what will be the answer? Remove now 300 from the investment income, please. Right. Minus 300 from investment income. Intra-group transaction. Okay. All good? Right. So, always, guys, remember when you get dividends from subsidiary, you have to remove that. Right. Next line. A dividend of 200,000 received from Arctic, a 25% owned associate. Now guys, is another mistake. From associate, when you get dividend, that also we have to remove. Now remove this 200,000, show minus 200 from there also. Yeah, exactly. The wording is very confusing, correct? Because normally when they say its share, right? I'm just 400 in 902 subsidiaries investment income. Okay, so his investment income, we have to always mark the number of months. No, that's right. Okay. Right, okay. Others, coming back to what I was explaining. Let's now see. We got 200,000 from associate. That also I have removed. Why I have removed that? Guys, listen. When it comes to associate, on the income statement, we are doing a separate working for them to show profit share of associate. Because we are trying to show profit share of associate only, we are removing the dividend. Right? So when associate pay dividend, what we should do? We should remove that. Why? Because for associate, we do a separate working. In that separate working, we are trying to show how much we have to get from them. That's why we are removing the dividends from this. So guys, now can you start writing over here separately under investment income, profit share of associate, working number 4, right? Mark it guys over there, profit share of associate, working number 4. Now Amjad, 400 is the investment income from subsidiary. Here can you see their own investment income, this one. So like revenue and cost of sale, their investment income is 400. Understood now? Right, okay. So guys, put the heading now, profit share of associate. Okay. Guys, can you start writing the equation now for me on this side? Okay, start writing the equation, right? Working number 4. Profit share from associate. Okay. Can you guys write the equation? Right. Profit share, right? Minus impairment, because I'm giving the whole equation, okay? Minus URP if A is seller, yeah, that's it. Okay, right. Okay, now guys, if possible, could you please calculate this and show it to me guys by looking at this paragraph? Okay, if possible, could you please calculate this and show? Only read this sentence, and try to do. Try to get me the profit share of associate guys if possible. Okay, guys, look at the question. Arctic is very good, guys. 25% own associate, and they have a profit of 2.4 million. Okay, so guys, profit of 2.4 million, but guys, we can't get the entire thing now. We can only get how much percent, guys? 25% only. Should I be worried about the number of months for the associate? No. You know why? They are telling it had held them for several years, right? So because you have held them guys for several years, exactly, it's a full year associate. Good. So therefore guys, then what will be the answer then? 600. Okay guys, did we have any impairment in that paragraph? No. Any URPs? No. So therefore guys, what you do, just ignore all of those and then get the answer 600. Okay, mark it guys over here 600. Now guys, take this 600 and please copy it to the front page of the income statement, okay, as profit share of associate. Copy it over here 600. Okay, right, all good. Okay, then guys, listen, in this paper adjustment number 5 and adjustment number 6 all okay. So they are telling assume except where indicated that all income and expenses accrue evenly over year. What does it mean? That means they are telling the revenue every month revenue is same, it seems, right? It's all equal, so it does not change, and there were no impairment. Okay, everything is good. So guys, I think now we're done with the question. Right, shall we guys now quickly take our calculator and total it up? Right, can you guys please get me profit for the year guys faster? Start working this out now. Please start calculating now. Profit for the year. Question is over. So guys, again, kind advice. These calculation questions what we do in class in February, another one time or at least 2 times, please practice it on your own as well. Okay, then you will tend to know, okay, this adjustment, this is how to do, this is where I'm going wrong, I need to be more careful. So please practice all of these guys another one time on your own as well. Okay. Right guys, little bit check and see guys. Revenue 84,500 plus 52,000 into 9 divided by 12 minus 10,800. How much guys? 112,700. Correct, no? Right. So if I'm making a mistake guys with my calculation, please let me know. 112,700. Okay. Then guys, cost of sale 58,200 plus 34,000 into 9 divided by 12 plus 1,500, okay, plus 200 minus 10,800 plus 300. How much guys? 74,900. Correct, no? Okay. Right, next one guys, gross profit 112,700 minus 74,900. Right, how much guys? 37,800. Right, next one guys, distribution 2,000 plus 1,600 into 9 divided by 12. 3,200. Right, administration expenses 4,100 plus 2,800 into 9 divided by 12. 6,200. Okay. Next one, guys, investment income. 500 plus 400 into 9 divided by 12. Right. Then, guys, I think the answer will be minus 500. Is it 300 investment income? Correct, no? 300. Okay. Finance cost, guys, 1,109. Right. Now, guys, we need to now take right profit before tax. Let's see. Guys, gross profit, I think I marked the wrong answer. No, guys, how much is the answer? Yeah, 37. I think, guys, I missed one number. Correct. Right. So, guys, 37,800 minus 3,200 minus 6,200 plus 300 minus 1,109 plus 600. How much, guys? 28,191. Correct, no? Right, 28,191. 4,800 plus 3,600 into 9 divided by 12. Right, then, guys, I'm getting the answer 7,500. Right, now get profit for the year. 20,691. Is that correct, guys? Correct, no? 20,000. Right, I reduced 300 because, Basil, can you remember there was this one? Subsidiary gave a dividend for 500,000. In that 60%, 300, get remove that one. That only I have removed. Okay. Subsidiary paid 500,000 dividend. Our share is 60%, 300,000. So when subsidiary pays dividends, we have to remove that from investment income. That 300 only I have removed. All good. Okay. Guys, now last part of the question. Now we need to calculate what, guys? Now we have to calculate this and take over here, right? Which is NCI profit. Okay. Now, guys, can you use this equation and try to get the NCI profit, guys, if possible? I'll erase the screen a little bit. Okay. Try to get me now the NCI's share of profit. Okay. Now, guys, please try to calculate NCI profit. This. Okay, you got that as the answer. No, right, let me check. Right. Okay. You got profit for the year, that one. No, there has to be a small mistake. Let me show you the main page. Okay, let me show you the main page. Okay. Guys, others, it will be check and see now. NCI profit. So you start off with, guys, subsidiaries profit after tax. Now, guys, in my paper, subsidiaries profit after tax is here. Can you see, guys? 10,400. Let's mark that first. Okay. But guys, you have to be careful. We have to take only profit for how many months? Only 9 months. Good. Right. Mark it, guys, over there. Only 9-month profit must be considered into 9 divided by 12. Right, all are guys okay with that part? Right, next one, URP. Guys, now you have to be careful once again. You have to always be careful with who is seller, because guys, remember, if parent is selling, the URP does not affect NCI. Only when subsidiary is selling. Now, in our question, is subsidiary the seller? Yes, Rakewood is the one who sold to Laurel, so therefore he is the seller. What's the URP that we have? How much we got, guys? URP, I remember it as how much? 300. Right, mark it, guys, over here, minus 300. Right, guys, listen carefully. URP, no need to put the number of months, because 300 is the answer after acquisition, no, guys. So that's the answer for 9 months, so no need to put again. Okay, guys, any fair value adjustments did we have? Yes or no? Yes. Can you guys remember there were 2 fair value things to adjust? Okay, right. What are the 2 fair value things to adjust? First one, guys, the depreciation. How much is the depreciation, guys, that you all got over there? 1,500. So mark that minus 1,500. Guys, not only 1,500. Can you guys remember in this paper for inventory also there was a small fair value adjustment? So what happened to the inventory? Inventory reduced. Correct or wrong? Right, now guys, think this is a little bit difficult part. Now when the inventory reduced, what did we go and do to cost of sale? We went and added to cost of sale. So guys, remember, when cost of sale we add, cost of sale goes up. When cost of sale is going up, our profit will come down. So over here, guys, you have to add and take as minus 1,700. How did we get 1,700 again, guys? Remember, 1,500 is depreciation, and 200 there was a movement in the inventory fair value. No, that also has to be considered. So therefore, it will become minus 1,700 the fair value adjustments. Okay. Guys, next one we have impairment. Did we have any impairment? No. So 0. Right. Now, guys, get the adjusted profit, please. Okay. Now, please get the adjusted profit. 10,400 into 9 divided by 12. 7,800 minus 2,000. So, guys, how much? 5,800. No? Yeah. But, guys, listen, from 5,800 now, there is no OCI. So, don't worry about that part. This is the entire adjusted profit. No, guys. Now, we should take NCI share. In our question, guys, how much is the NCI? 40%. Now, put 40% for this answer. Right, but the answer, guys, 2,320. That's the NCI profit. All good? Okay. Guys, now can you take this answer and, guys, now copy it over here, guys, faster? Right, please write it here. Right, NCI profit is 2,320. Okay, guys, now one more time, can you take this and write it here down? 20,691. Okay, guys, now can you quickly figure out for me the parent profit, guys, faster? Please now figure out the parent profit. Yeah, now, guys, what you should do, just remove that from the group profit. Now remove this one. How much, guys? 18,371. Yeah, that's the answer. Right, so, guys, with that one, successfully we have finished off a 20 marker on income statement. Right, so, guys, my December batch, now you have done 2 income statements with me. October people, please watch Friday recording, right, the one that I spoke of in the morning. Then for you all also 2 income statements are completed. Okay, guys, now listen, there is only half an hour remaining, right? Not enough time to do accounting standards. So accounting standards will revise next week. Let's start off, guys, month one income statement quickly. Let's do what we can for half an hour. All okay, because now you did an income statement. Now you know how things work. So I prefer another income statement. If you practice, it will be better because now you're in that rhythm. Right. I'll tell you all guys, we are going to do a very good question. Right. Let's do another one. NCI, right? 1 minute. Okay. It's like this, Basil. We can't like pick and choose that way. That's the problem. Okay. Okay. I'll tell you a small thing. Right now, so far in papers, mostly what has got tested so far is income statement. Now when you look at the past papers and everything, it's the income statement that has got tested more, but we can't like give up importance that way which one is important here because we don't know what we'll get for the exam now. Okay, that's the issue. Right, NCI, no, sorry, 1 minute. Right, others guys, you all can put the topic. I'll tell you guys which question. Just start writing guys over there. Consolidated income statement. Let's do another one. Okay. Right. Yeah, you can mark that better. I usually forget that. You can mark. I'm just all okay with this one. How much we got? We got 20,000. No, 2,000 difference. No, some 1,200. Yeah, please take a screenshot. Yeah. Okay. No, right. Okay. Guys, let's do this question. This is one of the what you can say a good question that has been tested in past papers so far. Let me now show you. Okay. Can you guys take the heading this way? Question name Plank Corporation. Okay, right. Please take the heading guys this way. Right. Plank Corporation. Right. Plank Corporation. So they are asking you to prepare an income statement. Yeah, for the workings not needed. Only for the main income statement is enough. Correct. Right. Please put the heading guys then. Plank Corporation. Right. Okay. So guys, now let's start now with the format guys over here faster. Now there are 3 numbers. So do it slowly. Okay. So put the heading then Plank Corporation. What is the question number? In my book, it shows 432. But in the new book guys, it has to be a little bit different. Okay. The latest version, it has to be slightly different. Okay, let's start then. Right. First, let's put the format guys quickly. Right. Plank Corporation or Plank Co Group consolidated income statement for 31st of December 2008. Okay. Consolidated income statement. Right. 31st of December 2008. Okay. Right, first of all guys, can you only write these words and keep, don't write any numbers because we don't know who is subsidiary and who is associate now guys, so just write the names really faster. Right, revenue is there, right, cost of sale is there, right, gross profit is there, then distribution is there, administration is there, investment income is there. So very similar. And I also guys remember last time when I was teaching like this, there was another one past paper also, right? We will do that as well, like not next week, little later. Then guys, finance cost. Guys, write and keep profit share of associate today also. For this question also, please write and keep profit share of associate. Right. Do we have other comprehensive income? Yes, this question guys, we have that also. Write that and also keep. Other comprehensive income. and then guys gain on revaluation, and then total comprehensive income. Then guys we have profit attributable to parent, and then TCI attributable to parent and CI. So guys this time you have OCI, so therefore guys some more additional sentences will come when compared to last time. Total comprehensive income. Right, please copy down this format guys quickly. Okay. And guys, those who are done with this one, guys, you all can do the group structure and show. Okay, those who are done with the format part, you all can guys do working number 1, group structure, and show it to me. I'll give you all 5 minutes in total. Okay. Now guys, I hope you have set up your group structure, right? Please check this paragraph and set up the structure. So please show who bought whom at what percentage and all of those. Okay, guys, can you look at the group structure, guys, quickly? Okay, working number 1, right? Please check on this part, and then I'll give you all the structure, right? Okay, now guys, in this question, what happened is something like this. Now, this question is finishing for December. Can you see, guys? So that means when does the question start? 1st Jan 2008. That's when the question is starting. Okay, 1st of Jan 2008. Question is finishing 31st December 2008. Okay. Plank has bought 35% of A since 1st of June 2007. Right. Now guys, first like this. P has acquired 35% of A. Right. So guys, what do we call then this person? That is our associate. Correct. Right. Is it a full year associate or like a mid-year associate? What do you think, guys? It's a full year associate. Why it's a full year associate, guys? You bought in 2007. Question is starting in 2008. You bought them before the year starts. Then this is a full year associate. But then on the other hand, guys, you also bought 85% of strip. Okay, P acquired. Yes, very good, Ashley. That's correct, right? 85% of S. When did you buy them? April. So, guys, if you buy them in April, how many month subsidiary? It's a 9-month subsidiary. Correct. It's a 9-month subsidiary. Okay. Right. Now, guys, you know it's a 9-month subsidiary now, guys. Okay. Now, guys, can you put the heading working number 2 NCI profit and copy down this equation, guys, quickly? And then we can now start copying the format one by one. Okay. Wait, guys, this one we can do it later even. No issue. We can do it later even. Right. Now, guys, group structure all are comfortable now. One associate who is for full year, one subsidiary who is for 9 months. Once you understand that part, guys, what I would like you to do, start copying the numbers over here one by one. Okay, now we have to now start copying these. Guys, listen, don't make this mistake. When you copy, first copy parent. Okay, start value 705,000. Okay, start marking 705,000 plus associate, sorry, subsidiary. Add subsidiary 218,000 into 9 divided by 12. Okay, right. But guys, listen, when it comes to Arch Corporation, who is Arch? Associate. Do we have control over them? No. So therefore, do not mark their numbers on the consolidated income statement. It's just given to confuse you. Guys, remember, like subsidiaries, income and expense, we don't do that for associate. For associate, we just do this single line working. Their income and expenses should not be added with our income and expenses. So don't go to add any of the arch numbers. Only parent and subsidiary. Okay, now guys, let's start doing it together. Right, cost of sale. Let's copy. Right, 320,000 plus 81,000 into 9 divided by 12. Okay, then guys, let's go for the next one. Gross profit, don't copy. Distribution expenses. 58,000 plus 16,000 into 9 divided by 12. Right, next one. Administration expenses. 92,000 plus 28,000 into 9 divided by 12. Investment income. 46,000 plus 2,000 into 9 divided by 12. Okay, finance cost. 12,000 plus 14,000 into 9 divided by 12. Right. Profit share from associate that we have to calculate later. Okay. Profit before tax, don't copy. Okay. Income tax, guys, copy 51,500 plus 15,000 into 9 divided by 12. Profit for the year, don't copy. Gain on revaluation. Right. Copy that one, guys, over there. 2,800 plus 3,000 into 9 divided by 12. Okay, so copy all the subsidiary numbers for 9 months. Do not copy associate numbers because we do not have control on them. Okay, all good, right? Now, guys, those who are done, you all can, guys, start Roman number 1 and 2. Very easy adjustments what I'm giving you. Okay, right? Please start those two, guys. Roman number 1 and Roman number 2. Let me, guys, zoom in a little bit. Okay. Please start doing Roman number 1 and 2. Should not take you that long. Easily you should be able to do. Guys, this time no need to worry about goodwill. Just to focus only on the income statement section. Only you focus on the income statement section. Right. Please finish off, guys, these two for me. Roman number 1, Roman number 2. Okay, guys, Roman number one, you have to do the fair value depreciation, right? Let me check on that answer. Good. So, guys, 8 million, we should divide by how many years? 3. But how many months we have to check depreciation for, guys? Only 9 months. 9 months subsidiary, guys. So, you have to only check 9-month depreciation into 9 divided by 12. Very good. Answer is 2000. Now, guys, look at the paper. What does the paper say? Go and mark it where? Inside cost of sale. Exactly. Very good, Basil. Your answer is correct. Right. Go to cost of sale and please add how much, guys? You have to add over there 2000. Okay. We have to add 2000. That's pretty much it. Okay. Next one, guys. Since acquisition, Plank has sold goods to Strip for 39 million. So guys, what you should do when Plank is selling, for one party it is sale, remove from sale. For the other party, this is purchasers. Please remove from purchasers also. 39,000. All are guys okay with that part? 39, 39. Okay. Right. Then guys, let us move on to the next one then. Okay, next one, what does it say? Where? Okay, Roman number 2. Okay, and also guys, after we do that, there is a URP. Okay, so guys, how to do the URP, guys, over there? Let's see. And also guys, they are telling, okay, first guys, let's focus until this part video. Right. First, let's focus until this part. Okay. So Plank has sold to Strip. So parent is selling to whom, guys? Subsidiary, right? Parent is selling to subsidiary. How much? 39 million. Strip had 1/4 of these goods. Okay, so guys, see, 39 million they are selling. They had 1/4. So 1/4 will be how much in that case? 39 million divided by 4. That's 9,750. That's the inventory held. Multiply this one with the profit. So guys, what's the profit that these people are keeping? 30% on cost. That means 30 over 130. Okay, that should be the equation, guys, over there. 30 over 130. So therefore, guys, the answer for that has to be 9,750 into 30 divided by 130. I am getting 2,250. That's the URP. All good, guys? So once you get the URP, please go and add this to cost of sale. 2,250. Add that to cost of sale. Okay, right. Amjad, remember when it comes to URP is for 9 months. That's why that answer we are not seeing, because see that link, since acquisition. Since acquisition means after April, no? Okay, so that means the answer what we get is for 9 months only, right? So therefore, we don't have to remove that. Sorry, we don't need to check that into 9 over 12. Okay. Guys, next one. Look at this. During the year, Plank Corporation also sold goods to Arch 26 million. The question is, should I remove this 26 million? What do you think, guys? Yes or no? The answer is no. Very good. Why is the answer no? Guys, listen. Parent, we are adding with subsidiary. So when you add, that answer is already there. That's why we are removing. Associate numbers, are we consolidating? No. So therefore, we don't have to remove that sale. Only parent and subsidiary sale only, guys, have to remove. Associate, we are not consolidating, no, guys. So then that effect of double counting will not happen, no. So therefore, you don't have to remove associate sales like how we do for subsidiary. Why? Because we are not consolidating them. Okay, right. Right. And also, guys, on the other hand, even the URP no need to calculate. Why no need to calculate URP, guys? Remember, who is the seller here? Is it the associate or parent? Parent. When parent is selling to associate, there is a URP. I'm not telling no, there is a URP, but that URP will not affect the cost of sales. Right? Normally, guys, when subsidiary is the seller, sorry, my bad. Only when the associate is a seller, it will affect the income statement. Not when parent is seller. Okay, so you don't have to mark that. Only this you have to mark it and show. Okay. Right. I'll show you the URP double entries and then you will get that. Okay, right. So guys, what we'll do is, guys, for today, let's stop the question at this point. Right. Basil, to answer your question, if the associate is seller, what we need to do, we need to add that to cost of sales and show like normally how we do for URP. Okay, so guys, what we will do, let's stop the question at this point. Next week, when I start the class, within half an hour, I will finish off this question. So this question, guys, when are we going to continue? Next Sunday. I'm telling guys again, students who are full-time students, please join the Thursday class. When I'm doing revision, we'll be sharing the link with you all. People who are working, guys, please try to watch the recording and do a recap. Okay, so guys, then that's it then, guys, for today. So again, guys, next class is when? Thursday. What time to what time? 2 to 6. Right. All right, guys, welcome then. I'll see you all then on Thursday, hopefully. Right. Yeah, Basil, I'll give you a heads up in the group. Okay. All right, guys, welcome then.